Joining us now out of Nairobi, Samuel Wachira, General Manager, Francis Drummond and Company. Samuel, let's start off with at this point, Longhorn Publishers has become the first publisher to list at the Nairobi Stock Exchange by introduction. How is the stock likely to play out?
Well, definitely, just like we are observing, it's the first time we are seeing a publisher listing on our market, which is very positive because we are getting to see a lot of activity in terms of how the market plays. And definitely for listing by introduction, it creates a bit of uncertainty in terms of how the market is going to take it up. And I guess the concern right now would be how they market and position themselves in terms of going forward. The liquidity of the stock, just like we noted, not very many shares in terms of marketing and also in terms of the listing because it's in the alternative segment. So definitely going forward, we might see a lot of play going forward, but hopefully we're going to see a lot of activity in terms of that counter in the next few minutes.
What do you make of the price of 14 shillings per share, Samuel?
Well, 14 shillings is fairly good and very encouraging because it makes it very affordable, and hopefully we are going to see a lot of demand on that counter, and hopefully also in terms of availability, especially on liquidity, because our market tends to really want liquidity, especially on in terms of foreign front. We are hoping that the supply is going to be sufficient.
But tell me, Longhorn Publishers, unfortunately, coming to the stock exchange, we've not had any precedent here. And a publisher in this day and age is terribly unfashionable, right? It is an old media company.
Very good observation, Larry. Well, right now we are going to e-commerce and e-marketing and a lot of electronic approach to most of these things. But look at them in terms of their positioning, just like you mentioned, it's a fairly old publisher coming into the market at this moment. But look at it in terms of the top shareholders, look at it in terms of their maybe positioning. We are hoping that they're still going to be able to try and take advantage, as even remodel their approach to still have a product offering that would still interest investors. Have
you read a book recently, especially a Kenyan book?
Well, that might be a bit of a challenge. I'm currently doing masters, so I'm reading more of the economic books.
And that's academic and required. All the same, let's move away. I'm sure you're making a lot more calls. And the Communications Commission of Kenya slashing the interconnect rates by 38%. It will come down in July to 1 shilling and 60 cents. Safaricom, which remains East Africa's most profitable company, is very opposed to this. What do you think this means for Safaricom?
Well, looking at it in terms of Safaricom's positioning, and just like you mentioned, yes, Safaricom has been for quite a while opposed to this, and we saw last year they managed to get a freeze from the president because this was supposed to happen actually last year, and having it approved now, which is still not clear because Safaricom is coming to the front and saying that the board is yet to approve that. So already we are seeing Safaricom is not very positive about it. Looking at that in terms of their positioning, over 67% control of the market, definitely. It would mean they're going to really affect in terms of their revenues because other players will still be able to access some of their revenues. And so that is a bit of a concern, and we should be seeing the market already reacting to that.
This means there's likely to be a price war coming back again in the Kenyan telecommunications scene, which Safaricom has generally tried to stay away from, and this affects the bottom line.
Definitely, and going forward, I guess for Safaricom, it's a bit clear that now they might really need to start to think about diversifying from voice to maybe data and these other services so they can be able to still sustain their bottom line.
All right, tell me something else about the Kenyan shilling hitting a 5-month low yesterday. What is happening on the currency front?
Well, Rani, I guess maybe what you could do now is stay a bit more in South Africa because the challenge we are seeing here is pretty interesting because we are looking at the key indicators of an economy, foreign exchange, interest rates, inflation levels, and when you try to balance all these things and look at it in terms of how the market has unfolded the last couple of weeks, we've seen the interest rates really come down significantly, and I guess those are some of the things that could be affecting the foreign exchange market, and also the risk that came with whatever happened yesterday, which I guess also has made a bit of foreigners become a bit concerned about the risk level of our economy. It's also another concern, but central bank has been coming very strongly to try and see whether it can be able to shield the shilling, but it seems like the ability for them to be able to do that might be still a challenge. And also as we close the year, we are seeing importers taking positions, which also creates a bit of an imbalance, but hopefully central bank will still be able to sustain the levels that we are seeing.
Is the market pleased with what the central bank is doing? Do they feel the CBK is doing enough?
Well, definitely there has always been a concern about how central bank approaches the foreign exchange levels. But again, look at it in terms of an open and liberal economy. Central bank has been more of a hands-off in terms of allowing the market demand supply forces to take charge. But I guess right now, seeing what had happened last few months and also last year, I guess central bank really needs to be coming out strongly on that front.
Let's move on to Parliament, which still appears very keen to control interest rates. The latest now is a demand out of Parliament that Cooperative Bank and Equity Bank, both of which are listed, should cap the interest rates they charge small businesses to borrow. Banking stocks, many of them are listed. Should they be afraid?
Well, definitely, I guess that has been one of the things that we've been seeing very unfolding very clearly. And even when you were here, we were discussing that at length. Look at it in terms of how banks perform. I guess the concern from my point of view as both a player and an investor is issues to do with the interest rate spread. Because right now, if I go to my bank, I'll get around a single digit for fixed deposit. But if I go to the other side and go to the lending division, I'll get almost 23%, which is a very huge spread. And that cannot be just attributed to default risk. So I guess the concern right now would be to make sure that investors are still shielded, and also at the same time the private sector is not curtailed in terms of the ability to still perform on our market.
Do you think Kenyan banks can report the same rosy earnings they've been doing with controlled interest rates?
That would definitely not be the case.
It would not be the case. Overall, at the Nairobi Stock Exchange, I'm moving back there. Do you think there's been a bit of a bullish run right now, but is there a likelihood of a profit-taking stance coming into place?
Well, looking at it in terms of the activities that you'll be seeing on the market, on the financial front, most of the companies like Kenya Commercial are now trading ex-dividend. So definitely, just like you noted, people are getting out right now so they can be able to get in at the lower levels. And also look at it in terms of the rally that we saw. Most of counters had already gained over 20%. And so most investors are being more conservative in terms of taking their profits. And going forward, I guess we should see a bit of a slowish performance of the market. But again, with all these factors coming into play, and as we go towards June, we are going to be expecting more corporate earnings, especially on industrials. So I guess we might see a bit of activity on that front again.
Do you see a lot of local investors, domestic ones, in the market playing out?
Well, for local investors, I guess the concern right now has been the issues of elections and the political risk in the country, which has actually made them become more conservative and long-term in terms of their approach. But if the numbers continue coming forward and continue being positive as they were, we might continue seeing them coming back into the market. And also the interest rates have also been coming down. So we are seeing a bit of a flight to quality whereby investors are shifting now from bonds into equities.